Hello, everyone, and welcome to the Lytham Partners Industrials and Basic Materials Summit. My name is Adam Lowensteiner, Vice President at Lytham Partners. Thank you for joining us here for our panel discussion titled Investing in the Recycling Economy, Converting Trash into Treasure. We are joined today by three executives from three great companies from the industry to get some of their insights and how their companies making an impact on the environment and the economy. I've gathered some topics that are of interest to investors and I hope to learn greatly from our panelists today. Joining us today are Mr. David Kratochvil, President and CEO of BQE Water, ticker of BQE on the TSXV and BTQNF in the US. Mr. J.F. Labbe, Interim CEO of Ecolomondo, ticker ECM on the TSXV and ECLMF on the OTCQB. And Mr. Aidan Mills, CEO of Northstar Clean Technologies, ticker ROOF on the TSXV and ROOOF on the OTCQB. Before we begin with the formal discussion, I would like to have each of you introduce yourselves and provide a brief description on your company and how your company is involved in the recycling economy. David, we could start with you, and then JF, and then Aidan.
Thank you, Adam, and hello, everybody. Real pleasure to be part of this panel. BQE Water specializes in the management and treatment of mine wastewater and wastewater from metal extraction, smelting, and refining. I guess we're part of the summit because there are various streams, contaminated waters that contain valuable metals of value that would, without proper treatment, end up being part of a waste. So instead of being recycled, recovered, resold, they would end up actually creating solid waste that would quite often need to be managed in perpetuity. So excited to be here and explain a little bit more about what we do.
So JF Labbe, you asked a bit of a background. So I started as a lawyer in the energy industry, became a strategy consultant in the US for many years, and then continued as an entrepreneur in the scrap tire recycling industry, which brought me to Ecolomondo over 10 years now. So Ecolomondo started as basically, it were two chemists who wanted to decompose hydrocarbon waste. Hydrocarbon waste includes rubber, plastics, shingles, and many other waste. And unfortunately, they ran out of cash flow, and they approached a guy named Eliot Sorella, who's the current president and majority shareholder. And he continued as a patient investor for many years. What he did was to invest in the development of the technology until it was ready to be commercialized. When that happened, basically about 5 years ago, we became a public company on TSX Venture, and that was to build our first commercial plant in Ontario, between Montreal and Ottawa. The next step is Texas. We already had started the plans, the project, the financing, but we still need to make the Ontario plant productive. So far, we had a long learning curve, and in fact, we are very close to beginning the production. So in a few words, Ecolomondo is a recycling, but it's also a clean tech, and it's also a manufacturer of end products. I'll mention that later in the interview.
Aidan, how about your background and what is your company involved in the recycling economy?
Thanks, Adam, and yeah, it's great to be in the panel and great to be sitting with you and David and JF. So my name's Aidan Mills. I'm the CEO of Northstar Clean Technologies. So as you may be able to pick up from the accent, I'm not from Canada. I'm originally from Belfast in Northern Ireland. Joined BP, worked for BP, the oil company, for nearly 20 years, and ended up as the senior VP running natural gas and oil trading in Calgary, and my wife's a teacher, and so she said when our oldest hit high school age, we were stopping international moving, and so we decided to stay in Canada and Calgary, which was great. So then I joined Husky. I also spent a couple of years working for Goldman Sachs before going back into the oil industry again at Meg. And so all these times, either engineering and operations in BP, all the way through to kind of finance and commercial in Goldman, etc. And I joined Northstar about 3 years ago, and that was right at the time where kind of energy transition was at its fore. And having left the oil industry was something that I thought was, you could see that there were some things that were just like didn't make a lot of sense in terms of energy transition and kind of like the balance of materials. Northstar had started a pilot plant out in Delta when I joined, and what they had come up with is they'd come up with a process and a technology that takes an asphalt shingle tile and splits it up into its individual component parts. And the reason why that's pretty spectacular is there's more than 16 million shingle tiles a year go into landfill. And that's more than 20 million barrels of oil a year just from shingles going into landfill. And Northstar had come up with a pretty proprietary technology to actually split the tile up into its individual component parts. And the most exciting thing for me is like through that commercialization of that technology, a bit like JF, I'm sitting in Calgary today, and we've literally just completed construction on our first commercial facility. We're commissioning it, and we expect to be processing here by the middle of the year. And so our process is really straightforward. Takes a shingle tile, splits it up into sand in the aggregate, the fiberglass, and the asphalt oil, and all of that is circular and can go back into the economy as industrial products.
Great, thank you for that. Now let's get on to some topics of interest. Can each of you discuss where we are in the cycle of the recycling economy? It seems like, given many of your applications, we are still very much in the early innings. Is that so? And I pose that let's start back with Aidan again.
Yeah, look, I think that, the industry, so let's just take shingles as an example. So a few years ago, as the amount of shingles went into landfill continued to grow, ARMA, which is the Asphalt Roofing Manufacturers Association, so that's the kind of the industry association that has all the big guys in it. Our partner Tamco, ICO, Owens Corning, Certainty, they're all in this division or kind of association. So they came out and they said by 2035, they want to divert 50% of all shingles going to landfill away from landfill. And they want to divert 100% by 2050. So it's a bit like the carbon neutral statement by an oil company. But I think that the industries are recognizing that putting shingles, as an example, into landfill is something that is not sustainable. And when you look at the fact that it's full of, as we can break it up into industrial products, I think that that's the driver that really gives us the ability to deploy our technology, because our oil, as it comes out the back end, is fully circular, so it can actually go back into remaking new shingles. So I think the genesis of these, the genesis of the recycling business has to start with the manufacturers of the, for in our case, shingles. I think when an industry association recognizes that that's something that needs to be done, like plastics or etc., that's where it starts. But it is not fast. These processes are not fast, but they need the realization of the organizations to start with to even make the first step.
Okay, where are we in the cycle right now of the recycling economy?
Definitely in the early innings of recycling. In fact, it's interesting because there's many parallels from the industry where I work with what Aidan just mentioned. The parallels and clear distinctions. If you look at this, our main feedstock for now and for many years is the scrap tires. And scrap tires, if you look at everybody talks about how good the industry has developed and all over the last 40 or 50 years. Basically, all we do with scrap tire recycling is we shred them, and And the industries found applications for tire shreds or chrome rubber. For those of you who went to play soccer on AstroTurf or field turf, you've got some little grains left in your shoes. This is chrome rubber from scrap tire. But the tire shreds can be used for not landfill, but for filling sites and all that. So it's really basically it's just applications as fillers. So it's not, you can call it recycling, but it's not at all what we do with the tires. What we do at Ecolomondo, the technology is to take it to the next step. We take the chrome rubber, we decompose it, and we extract the original ingredients. So, of course, the end products that we produce go back in the manufacturing industry, and they become, part of the real circular economy. So many people use different words, but it means different things too. And sometimes the word recycling itself means many different things. In the case of scrap tires, what's interesting, unfortunately, it's due to large tire fires that you had in the 90s and 80s, maybe. Some of them lasted 9 months because if you bury the tires, there's still air in it and it can continue burning underground for months. So these showed the governments that it was a real hazard. There was strong regulation. And the advantage of scrap tires today, and you'll see where I'm going to with this, is that there's a clear network for scrap tire collection, scrap tire disposal, scrap tire identifications also. So when people buy a new tire, they have to pay an environmental fee or some kind of tax, or however it is presented. We pay a cost, $5, $3, $6, depending on the state or on the province, and that cost is used to recover and recycle. So unfortunately, it started with bad, large fires. Beauty is it forced a regulation to establish a collection network and a disposal network. I wish that were true for the other types of waste. I'm sure Aidan's challenge is more to get clean shingles from waste sites. We get that. We are lucky enough. We get clean feedstock. All we have to do is tap in the system. We say, hey, we're ready to take some, and poof, trucks show up at our door, and we are paid a tipping fee for that. So that's great. But all of this to say, we are part of the recycling economy, but in fact, we're not. We are recycling because we're taking feedstock that is waste. But in fact, our revenues are basically end products that we manufacture. We sell, after we decompose the chrome rubber, we sell oil, we sell carbon black, and we sell steel. So these are commodities. They're not recycling or anything. But fortunately, thank God, the pressure today, the markets today, they put a green premium on those end products because it's recovered materials. And the economy today values that. So it should value a lot more for all of the waste. And I wish we could segregate all the waste so that many more recycling opportunities would show up.
David, how about yourself? Where do you think we are in the cycle?
Yeah, listen, so in our sector, being the mining, metal extraction, refining, smelting sector, I would say that it's early innings, but it's also very cyclical. The industry is very cyclical. And one of the things that I want to point out is that recovering and recycling value from waste, right, in many cases is still viewed as a nice to have, not a must have. And so what makes nice to have into must have? Well, one driver obviously would be regulations around liability associated with waste. That has, the secular trend is that the regulations are tightening. So that's moving in the right direction, albeit quite slowly. But then there is the superimposed cyclical trend of the commodity prices. And I think that suddenly becomes a big driver at the time when metal prices are high, commodities are strong, and clients can see paybacks and visibility around commodity prices. You give you an example that's in the gold sector. You know, the gold deposits that are, so to speak, clean, that contain just gold, are getting rarer and rarer. And more often than not, you would end up with having other metals mixed with the gold that would be leaching out with the gold, such as copper and zinc. And so in those situations, now you can actually apply technology like our SAR technology that separates selectively the copper from zinc and from gold, and you actually generate additional revenue from the base metals for a precious metal producer while at the same time recycling cyanide. So those opportunities arise, but they arise and disappear depending on the cyclicality of the commodity prices. So I would still maintain that, you know, in our sector, it's very much commodity price-driven market for recycling. And but there's also the geopolitics now, where basically every pound of copper that you recover additionally from waste is a pound of copper you don't have to import from anybody. And so there is an additional driver that's I think coming on into the sector.
That's a great point, and that actually feeds into my next question, and we'll hand it back to you, David, as well. Can you quantify what impact your technologies provide, both from an economic standpoint as well as an environmental one? Basically, as you suggested, using your outputs prevents the need for a new virgin material from being manufactured. Is that correct?
Yes. So in the precious metals sector, our technology basically enables recycling of cyanide. So for every ton of cyanide that we recover and recycle, the client is saving money. They don't have to purchase fresh new cyanide, but they also don't have to spend money on destroying the cyanide they already used, because they have to destroy it as well. So the economics is extremely strong. And at the same time, they are recovering these byproducts of copper and zinc from the process. And what's the impact? I can tell you it depends. It's highly sensitive to the geology, it's site specific. But in certain situations, the technology actually enables the mining, enables the cost-effective production of the precious metals. Not in every case, but in some cases, the technology is actually project enabling one, and that makes it really the must-have for certain producers. As far as the environmental repercussions or additional benefits, the one thing that I would say is the recognition of the industry now is that the simple accounting equation is assets minus liabilities equals shareholder equity. And the recognition there is now that wasn't necessarily there 10, 15 years ago, that to grow shareholders' equity, you don't have to always focus on growing the assets. You just have to minimize the liabilities. And part of the liability minimization is to actually minimize the amount of waste that you're generating and the stability of the waste. And quite often that waste still contains metals of value that could be recycled and dramatically reduce the tonnage and volume of waste that you need to handle. So I would say that that's, in a nutshell, the environmental impact that's actually also improving the overall shareholder equity.
Jeff, can you quantify the impact on your technologies, both from an economic standpoint as well as environmental one?
Environmentally, there's many, of course. As I mentioned earlier, we recover the materials from the tire. So I'll just list them. We extract the steel, so that goes back directly in the industry as a commodity. We extract during the process. There's gases that are extracted from the rubber, and These gases, some of them cannot be condensed into oil. So we store them, we scrub them, and we use those gases as fuel source for heating up our process. So it's basically self-sufficient energy-wise. In other words, there's no waste from our process, which qualifies also as a clean tech, which it makes it a bit different than just recycling itself. And another end product is the oil. As I said, some gases are condensed and become oil. So we basically extract oil from a product that needed oil to be produced with. So that is truly circular economy. It goes back, and there was a bit of a twist on that. I'll come back later on the next question. But for the oil, we were planning on selling it as oil. So as David mentioned, the more we extract, the less we need to import, or it's better to produce in Canada than abroad. And the last item is carbon black. Carbon black is something people in the industry may know. If you're not, looks like the toner in your printer, the thing that will always blacken your tip fingers. So carbon black is used to manufacture, it's an essential ingredient of rubber, black plastic. So basically the laptop we're looking at, the black plastic of it has been colored with carbon black. And to produce carbon black, it is a simple process. They burn oil and they collect the soot from it. So you can imagine how polluting that process is and how polluting that process, that product is. And it's one of the top 10 industrial commodities in the world. So it's all around us. Demand is growing and it's highly polluting. So recovering it from the tires makes it very valuable economically, but also most specifically environmentally. So the beauty of all this is when you can, with your technology, recover the maximum value of your waste, that's perfect. It has to be economical. In our case, we're lucky enough. That's why we focus on scrap tires, even though the technology can process other waste. We focus on scrap tires because it produces the carbon black at the end, and that's about half the economic value of the whole process. But when you have a process that can be profitable, then that's perfect. Again, I'm coming back to a message I gave earlier. It happens to be in the recycling industry, but that could be worth in any other industry, and it probably should be. We see investors being more and more strict on return and the profitability, and they want to do it in investment. A green investment is no longer satisfying. So if you're profitable, if your process works, then it's good to go.
Can you quantify the impact of your technologies, both from an economic standpoint and as well as an environmental one? Go ahead, Jeff.
I'll add a couple of numbers. Basically, a plant in Ontario, which is the smallest size of our technology, we're talking about 15,000 tons per year of scrap tires that we process. So basically, we produce 15,000 tons per year of end products as well. Construction, we're talking about $40 million, 30 jobs plus about 20 more when production will kick off. And revenues are roughly for that plant a bit over $1 million per month. But more importantly, we create value, we create local jobs, we reduce imports, we increase exports. So again, a beautiful economic model.
Thank you for those. Appreciate it. Aidan, can you quantify the impact of your technologies, both from an economic standpoint and an environmental one?
Yeah, and actually, I agree with JF's point fully, which with respect to the market now. I mean, we're a manufacturing business, and our feedstock is a waste product. So literally, whether it's deemed recycling or repurposing or manufacturing, that's kind of like our business model. So a bit like JF and the same thing, we get paid for a tipping fee for the shingles that come in because we're an alternative to landfill. So we set our tipping fee to ensure a guy who's got a truck full of shingles turns left to us and not right to the landfill. So we're kind of pegged to the local tipping fee. And then, as I said earlier, we separate the shingle into kind of three component parts. So, we separate. So, first part of this of the process separates the aggregate, and the aggregate can either go to blend sand, just in normal construction, or we're also doing the R&D in that to see if it can be sieved to go back into shingle manufacturing. The fiberglass we believe can go into concrete as reinforcer. And then the last thing and the most valuable product, of course, that comes out the back end is a bit like JF's, carbon black and that's asphalt. So the asphalt can either go into road building, it can go into flat roofing, or it can go into shingles. Now, one of the investors in Northstar is Tamco, the big US shingle manufacturer. They own about 20% of the company, and they've done the R&D and proven that the shingle oil, the oil that we produce, is completely circular. All the testing has been done, and it is proven to be able to manufacture new shingles, which is phenomenal because we can actually say, look, we have a manufacturing business, but it goes back into a circular economy, and the most valuable output that we have, which is the asphalt, can go back into shingle manufacturing. So, the demand for that is obviously massive, which is great for us. And to be fair, it's hardened asphalt, so it always has to be blended. It's not, it just can't go into make shingles straight away. And our economics kind of similar. Our base plant is a 40,000 ton a year facility. If we run the plant 24/7, we can, with no incremental capex, we can run 80,000 tons a year, and we produce, as the percentages out the back end of sand, fiberglass, and asphalt. Roughly, a plant costs between kind of $20 million worth of capital and 5 million of associated costs, so 20 to 25 million to build, and produces about $10 million worth of revenue or 5 million of EBITDA on a base case facility. And if we run a 24/7 facility like our next plant in Hamilton in the GTA, that will produce about $20 million worth of revenue and 10 million worth of EBITDA per year. And the environmental figure comes from kind of three things. So the first thing is in the base case facility, we divert 40,000 tons of shingles away from landfill. So of course, diversion. If we run a 24/7 plant, if there's enough shingles available, we can do 80,000 tons a year. Our carbon footprint is 60% lower than the base case. So manufacturing asphalt and putting a ton of shingles in the landfill, our footprint of manufacturing asphalt from our facility is 60% lower. But it's really important. The kind of third point, though, from a carbon perspective, I've always said is really important. We don't include those economics ever in the numbers that we talk about. We talk about the manufacturing business numbers, because what we don't want is, and often you see people kind of, who have got any element of clean tech get pilloried for this, which is people say, oh, well, their business only works because they're assuming $100 a ton for carbon. We assume zero. So we actually say this is a manufacturing business. And suddenly, after I've done the LCA and I've done the analysis and we've got the third party sign off and all the stuff that you have to go through to validate your CO2, at that point in time, then that's just upside to the business. So that's a really important point, I think, for manufacturing businesses that are using, potential waste products as their feedstock. It's really clear that we need to talk about them as manufacturing businesses, because that's essentially what they are.
I'm going to combine the next two questions. Some discussion just came up about attracting investors. Economics are a big deal when you're trying to attract them. Can we take a moment and discuss how you like investors to view your opportunity? It's investing, in the future. It's betterment of the planet, but it's also being able to have a return on investment and a very long tail of predictability well into the future. Do some of those things seem like a fair assessment? And I'll pose it back to Aidan, this question.
Look, I think that's true. I mean, I think the whole well, let's invest in this because it helps the planet is kind of often can be step one, especially for some of the funds, but ultimately it does come down to the economics. So the way that I think about our businesses, and I think for ESG businesses, there are three steps. So the first step is, does your technology actually work? Have you got a pilot plant, et cetera, et cetera? I think the or like, you kind of invent the technology. And that's where equity comes into the business, to help you develop the technology. Then you've got the second step, which is the pilot plant. So does your pilot plant work? And the most difficult step always is, because it takes the most money, is the first commercial facility. So the way that I think about our business is, I mean, I'm literally sitting at the first commercial facility that is now constructed. We're now commissioning, and we expect to be, up and running by the middle of 2025. So when investors think about our business, we will have de-risked this technology by the middle of 2025. So really the business model after that is how many plants, how fast, I mean, you've got to do it in a managed way, controlled, but how many plants can you roll out as you go forward? And so as we think about it, if we have a city between 1 to 2 million people, we can roll out one of our facilities. The plant in Hamilton, which is in the GTA. I mean, obviously there's, it's like 5 times the size of Calgary. So, we could easily build 2 plants in the GTA. So our business model, as you think about our business model, once Calgary is up and running, which is obviously one of the criteria for 2025, then it's all about rolling the plants out step by step. And look, as we think about that, if you think about an 80,000 ton facility that can deliver an EBITDA of 10 million bucks, and you think about the waste to value space that these three companies are in a multiple of, roughly 10x, it means that every time we deploy a facility, we should be adding 100 million bucks worth of value to the value of the company. And if you think about that, your question about what do people need to think about the tail of this? Well, if we continue to build 3 plants per year, that is a very long tail, because to solve all of the asphalt shingles going into landfill in North America, we'd have to build 400 Northstar facilities. So that's a pretty long tail and a pretty decent EV added as we build per plant. So yeah, that's, as investors think about that, they can just predict how many I'm going to build in within the next 10 years and multiply that by 100.
How about yourself, David? How would you like investors to view BQE?
Well, so first of all, I haven't really spoken much in detail about our technology or applications, specific plans, but we've been in existence for over 25 years and built 30 facilities in the sector. Not all of them are recycling or recovering value from waste, but our technologies are all commercially proven, and we have large scale applications. The key to us is really how do we actually monetize the value of our intellectual property, which is through recurring revenue, which we attach to successful operation of these facilities. So at the moment, well, just looking at last year, for example, our plants around the world recovered over 5,000 tons of base metals, mostly copper, but it's combined nickel, zinc, copper equivalents, and in selective separate products, and over 3,000 tons of sodium cyanide. When I look at when we built the plants, right? So specifically in the precious metal sector, I talked about the cyanide recovery and base metal value recovery from the precious metals projects. The first plant we built was 2008, and between 2008 and 2018, there were only 2 facilities we put into production. And since 2018, so for the first 10 years, only 2 plants. Since 2018, we built basically 4 plants in 6 years. So we're seeing the demands increasing. And again, when you put it in perspective of the gold metal prices, gold and silver, looking at the trends between 2008 and 2018, it's very different from what's been happening since 2018. Likewise with the base metals, the plants that we built, the first plant we built in 2004, it was built when copper prices were significantly below where they are today. So I think the recognition that there is a need to address the long-term liabilities is growing, and the metal prices are certainly helping with a lot of projects. And so the way I would like investors to think about BQE is basically a play for generally the metal sector, the base metals, precious metal sector, but without actually being the mining company. So they would be investing in a company that generates recurring revenue from these facilities that are actually recovering value from waste, but not being a commodity play, because our recurring revenue is not linked to the commodity price. It's a service. We're a service provider. So all the metals and all the cyanide we give back to the owner of the project. We don't have any exposure to the metal price, but as long as the feed stream is available, we get our recurring revenue. And again, if investors believe in the general trend in demand for critical minerals, I think we would benefit from that.
JF, how would you like investors to view your opportunity?
I could turn off the screen right now because Aidan and David mentioned all the notes I had taken. So I'll try to. In fact, if you look at the investors we've had in the past at Ecolomondo, basically the founders, and you can see the evolution also of the industry, I think, in general. So the founders, they had a recycling dream. They wanted to dispose of waste, and they had, a very good vision for it. When they approached Elliott, our current president and majority shareholder, he was a patient investor, but he was also looking at the economics and had a green vision. Today, people are much more skeptic. There's been a lot of bad experiences around, and there's been a lot of bad things. But I think, to the contrary, it shows a lot of opportunities. And things evolve. So I'll just stick to those two examples that we have here. In our case, when we became public in the prospectus, we were, if you look at the details we were giving on the oil we would produce, basically we were looking at selling it to oil distributors, simply wholesalers. And with the evolution of the market and the clients or the client base and the pressure they had from ESG and from their own clients, we were approached by carbon black manufacturers. They need clean oil or green oil to produce some green carbon black, even though it's highly polluting. The only alternative they have is something like Ecolomondo's. So instead of selling to the oil guys, we are selling to the guys that were purchasing oil to produce carbon black. So to be honest, if you asked me that 5 years ago, I would not even have thought of it, and nobody here would have, to be honest. Same happened with the carbon black. Of course, we were thinking we'd sell the carbon black a bit like David does with his clients. They stay in the family basically, and they would have stayed with carbon black companies. But we were approached by direct clients. One of them, for example, deals with an American client, and he's producing material that uses virgin carbon black. The client in the US, because of ESG, imposes in its suppliers to use more recovered material. They don't have anything around. Their suppliers of carbon black have no alternative so far. So they want to purchase literally 100% of our production, everything, right away. So it's an interesting twist. And again, we would not have envisioned that 5 years ago, not at all. So these opportunities are changing, and I think it is interesting. But bottom line, it relies on good technology. So I look at my two colleagues here, and it's interesting because we have good technologies that are clean tech and that recover materials. And if you look in our case, I mentioned earlier that we recover the gases. The only few other competition we have, if I may call them competition, they two out of the three others don't recover the gases. So for us, it's a huge saving, but for them, it's a less clean tech if you think about it, because they dispose of the gas. It's less it's a lower recovery rate from the scrap tires, and it emits more emissions and all, so it reduces the carbon footprint at the end of the road. And the other example is the percentage of carbon black. We invested heavily on automation and the systematization of the process, and we recover about 40% of carbon black. That's the best value that we have in our products. So of course, if we can get a process that extracts more percentage of carbon black, we get a lot more EBITDA at the end of the day. And the other technologies that are around, as I said, there's only 2 or 3 around in the scrap tires, and they collect about 22%. We go up to 40, so on average. So at the end of the day, it creates value, and it attracts investors that are serious and they're looking at the economics. Just to come back at Aidan's point, you made the calculation for the number of plants. We did the same, so that's why you guys stole all my points. If we had 100 plants of Ecolomondo in North America, would be like 5% of the markets for carbon black and for oil. So there's so much room for recycling and recovering that we are little ants in an ant farm. So that's also very good for investors. You can invest in something else than Shell. You can invest in all those companies that will be oil manufacturers.
I think we can squeeze in one more here, one more question. But before we conclude, everyone here runs a publicly traded company. Is there something about your company that investors may not fully appreciate, or about the company itself, or about your technology? Anything of that you'd like to share? I would be curious to hear that. And David, we'll start with you.
Well, Adam, it's very difficult for me to comment really, because as you know, publicly traded companies, we have pretty stringent disclosure. What I don't think people appreciate necessarily about BQE is that really in so many ways the business is de-risked. We have commercially proven technologies. It's no longer, it's not R&D. We've built dozens of commercially industrial sized plants that are successfully operating. We've had senior management without turnover in place, for the last 15 years. We're cash flow positive, and our balance sheet is growing. We have no debt. So as far as, investors looking at companies that offer them lower risk than others, I think that's maybe one thing that, we're a microcap, and people looking at microcaps consider them maybe risky and speculative. But in so many different ways, we have recurring revenue. Most of our revenue is recurring, cash flow positive, no debt, commercially proven technology and management in place that's been together for a long time. To me, that's maybe one of the factors that are not exactly radiating off our website or would come up only in direct conversations with people.
How about yourself? Is there something investors may not fully appreciate about your company or your technologies that you'd like to share?
I didn't hear you. Was it for me?
It was for Aidan. I'm sorry, Aidan. And then we'll go to you, JF. Sorry about that.
Didn't hear you there. Well, look, I think so. Slightly different model, of course, than David. We expect to have our first commercial facility, as I said, it's constructed and we're commissioning it. So, we've talked a lot with investors about that. I mean, probably the fun fact about us that investors should think about is, like, I think we're like the Tim Hortons of asphalt shingle recycling. So you can literally put one in every city. So yeah, I mean, as people think about, the business model going forward, about Northstar, it's a capitally efficient, relatively high return business as we roll this infrastructure out. And really, if we do it in a controlled manner, it comes down to the which city do we go to next, building kind of three plants a year and potentially licensing the technology when it's mature enough to do that. Because kind of referring back to what I said earlier, and a bit like JF said, the market for this, the demand for the diversion of shingles away from landfill is absolutely huge. Cities, as you know, have got Clean City, they have diversion programs, they've got reduction in landfill, both size and standards, and the basis of the business where we have a fully circular product that can go back into shingle manufacturing, and the amount of tiles that are manufactured, using asphalt shingles, that market is 85% of all new roofs in North America are shingle roofs. So we think from a supply perspective and from a demand perspective, we're in a phenomenal place once we prove the technology from Calgary.
Thanks, JF. How about you wrap it up here? Anything you'd like to express that investors maybe don't fully appreciate about your company or your technologies?
Yes, of course. What's interesting in the recycling industries is that our feedstock is waste. So the formula in our case now, and I can relate to Northstar. What was long and difficult and costly was to develop the cake recipe. Now that we have it, all we have to do is replicate it elsewhere. And of course, we have to be careful about our comments on the public stock. But we'll see in the next few months if the production works as expected. We know the technology works, and basically after that, it's a matter of expansion. And all we have to look for is our feedstock, and that applies to Europe and some countries in Asia and everywhere in America. If I may say one point, and I'm not doing politics here, I'm just saying the Canadian reputation really is an asset for us. I would assume for our other two companies as well. But we've been approached by investors abroad and people who want to develop other plants like we have in Ontario, in other areas of the world. And once we meet the standards, the strict criteria, the government regulations, and everything, we know we can basically meet them everywhere in the world, Northern Europe, America, and also the reliability of the Canadian technology. We have a prospective client. They came out of what we were expecting, and again, as I mentioned earlier, many opportunities change quickly these days in this industry. So they were looking at recycling their scrap tires by purchasing a foreign technology. Somebody mentioned them about us. They came 2 weeks later. They visited, and now they're pushing on us to buy a plant right away. But the main factor in the whole scenario was Canadian technology. It has a good reputation, it has a good brand name, and that's true for everywhere. So I assume the same for Aidan and David. But in our case, it really played a big card. And our next project is Texas, and but that one will come fast. I can tell you.
Great. Thank you. Unfortunately, this is all the time we have. I found this to be a great discussion. I want to personally thank Aidan, JF, and David for participating in this discussion, as well as to our listeners. If any investors would like to get in touch with any of the panel companies here, please reach out to myself or any member of the Lytham Partners team. Thank you and enjoy the rest of the summit.
Thank you.